All right, thank you so much. This is Goldie. I'm Adam, and thank you. Can you guys hear me? Yeah, cool, good. All right, this talk is called How Do I Pay My Taxes? The IRS is after me. Disclaimer, not legal advice, not tax advice. I'm not a lawyer. We'll talk about, I'm just going to briefly give my view on what a DAO is, talk about the legal issues in DAOs broadly. I was surprised that I'm the only speaker today talking about legal issues at all. So I'm going to cover legal issues including taxes. We'll talk about DAOs without legal entities, which is a lot of DAOs, how you can use legal entities in your DAO system or Web3 system, and some unique tax issues for DAOs, followed by what it's like trying to get good tax advice or legal advice for DAOs. Just a little bit about my background. I'm actually going to skip everything on this slide and just tell you that over the past few years, I've written 3 laws that have passed in the Marshall Islands, which is a sovereign nation in the South Pacific, creating a DAO LLC. It's a nonprofit and a for-profit legal entity for Web3 projects. And we built it for DAOs and Web3. So we asked the world, all the lawyers of the world, hey, what's something you wish you could have in your legal entity that you don't have in Delaware or Switzerland or Cayman or BVI? And we built that into the legal entity in the Marshall Islands. I now run the company called MiDAO, which promotes that entity and helps people set that up for their project. And I'm the host of the Just DAO It podcast. This is actually kind of old news. Even last year, I felt like at the DAO events, people were still kind of debating, like, what is a DAO? And like, what makes something a DAO or not? But I think we're mostly in agreement now that it's that you're doing these things on the blockchain instead of on paper or other documents, right? Membership tracking, governance and voting, treasury management, and also controlling software. Now, at the same time, once you do all that stuff, well, what does it mean? Well, it means you can have much more democratic forms of organization. It means whole new ways of thinking about people and process that you also have to figure out, that we're all trying to figure out in the world of DAOs. It's not like you just put your governance on chain and that's it. I like to summarize why DAOs matter is that they're compliant, transparent, global organizations that are as easy to create as websites and scale at the speed and cost of the cloud. As all of us know, Web3 and DAOs are growing extremely fast. There's actually a lot more DAOs out there than I think a lot of people realize. If you look at like DeFi Llama or I forget the website that was shown earlier, they'll usually say there's like 5,000 DAOs or 10,000 DAOs. But most of the DAOs we work with, we have over 100 clients that are Marshall Islands DAO LLCs, and 90% of them are not listed on DeepDAO or DeFi Llama or anything like that. So there's a lot more DAOs out there. They're just earlier stage, but a lot more than people usually talk about. So I often talk about all these different legal and tax issues. Many of them are legal issues and how they're different for DAOs as opposed to traditional organizations. Today I'm going to focus on the ones that are in bold, which is DAOs without legal entities, what it means to get a legal entity, especially for tax issues. We'll talk about taxes. We'll talk about a few other types of transactions. DAOs without legal entities. So a lot of DAOs don't have a legal entity. And if you're part of a DAO or you started a DAO and you've never heard someone say the word legal entity, you probably don't have a legal entity either. Now, in the world of law, in the world at large, there have always been people that have come together for a common purpose or in a common enterprise to do something together. Right? It wasn't always online, they weren't using the blockchain, but this is something people have been doing since the beginning of time. And so you can find the history of legal treatment for people that get together to do something together. Maybe they have a shared treasury, maybe they keep it in a box, maybe they keep it in a bank account. And what most Western legal systems call these groups of people that are engaged in a common enterprise without a registered legal entity, they call it a general partnership. And so even if you don't register a legal entity, you kind of get one by default from the government. Now, each jurisdiction treats general partnerships a little bit differently, but generally speaking, what a general partnership means, first of all, for tax purposes. Oh shit, sorry. Goldie, come here. Come back up, come on. Sorry guys. Goldie, come here. Hey, come here. Sit down. Come on. Here, sweetie pie. Sorry about that. Usually she won't leave my side. Okay, so let's say a group of people gets together and they're engaged in some kind of common enterprise, and that common enterprise generates, there's 10 people you generate $1 million worth of earnings after costs, and you have no legal entity. Virtually every government in the world will say, okay, each of you as an individual is responsible for paying taxes as if you had personally made $100,000 worth of income, all right? And so if you're in a DAO with 1 million people and you make, well, let's just say 1,000 people, and you make $1 million and there's no legal entity, government, the IRS, right, once they figure out what DAOs are and like what's going on, which is probably coming soon, they're gonna come and say, you each owe taxes as if you had personally made $1,000. Right, that's the reality of DAOs without legal entities. And so I'll talk about how you can use legal entities to help solve that problem. The other thing is unlimited legal liability. So not only tax liability, but what happens if your DAO has an event and someone trips and falls and the DAO gets sued? Or you're offering a DeFi marketplace and someone loses millions of dollars from a pool that they had locked assets into that your DAO governs. If you don't have a legal entity, and this has been shown recently through actual court cases where DAOs have been in court for the first time, if you don't have a legal entity, each of the people involved in the DAO can be personally held liable for all of the damages associated with what went wrong. You can lose all of your assets, right? It's not just a matter of how much you put into the DAO. They could go after your house, your car, your family's assets. So these are all reasons, not just taxes, why it's really important for DAOs to have legal entities in a lot of cases. So there's lots of legal entities out there, and the topic of this talk is not how to pick your legal entity, but there's a lot of options, including the new DAO LLCs. There's a lot of jurisdictions. So you've got, especially what you see on the screen are some of the most popular jurisdictions and a couple entity types. So let's talk about entity protocol separation. So in most crypto projects, there's at least some kind of protocol or dApp. So look at the lower right. That's the dApp. Now, the members or token holders are interacting with that dApp. Money's going in, money's going out, maybe other assets are going in and out, NFTs are flying around. Now you want to add a legal entity to the scenario. So if you look at the top of the chart, you've got a MiDAO nonprofit DAO LLC. That's what we create. I'm not trying to endorse it necessarily for every project. But what you can see is that just because activity takes place with the protocol doesn't mean it's taking place with the DAO and the legal entity itself, right? So like Uniswap DAO and Uniswap Labs, neither of them say that every dollar that goes in and out of the Uniswap protocol is going in and out of their company, their legal entity. It's separate, right? That money is going in and out of the Uniswap protocol every day. None of that money is being accounted for as if it's going through the DAO. Now, a lot of crypto projects even add another box to the picture. So you have some kind of opco or devco. So on this chart, that's on the right side of the chart. So what you have here is members or token holders on the left side. You've got the dApp or protocol at the bottom, and the members are interacting with that protocol, maybe making money off of it, maybe putting money or other assets in. And then you've got a nonprofit, could be a DAO LLC, could be a foundation that's governing that dApp or protocol. And then you've got some kind of devco. Often it's like a Delaware C Corp, especially if the founders or contributors are American, or it could be a Delaware LLC or some kind of local entity to where the founders are. And the DAO might get funding from the protocol. It might get funding from grants from the ecosystem funds, and it pays a fee to the traditional incorporated entity, which is usually a for-profit, which can then distribute its earnings to its members. And the reason I show you these charts is that when you think about paying taxes, you've got to separate what is flowing where, right? All the money flowing through the protocol, I don't think any company is planning on paying taxes for that, because that's just people interacting with other people. Maybe there's capital gains, maybe there's other transaction-related taxes or implications between the people interacting with the protocol, but that kind of doesn't involve your company or either of your two companies. Even though you guys made that software, it's not going through your company. And then you have a nonprofit and a for-profit, and they're each going to have a different tax treatment. Let me try putting Goldie down here again. Okay, stay right here, okay? Another really common legal entity combination is called the Cayman sandwich. It's been used since before DAO LLCs were invented, where you combine some kind of labco, opco, devco at the top with a Cayman foundation, with a BVI foundation. And in all these scenarios, even if before you had thought of all of the money flowing through your ecosystem as just like flowing through one box in the middle, really you've got to figure out how to account for it flowing through all the relevant boxes. And so in this case, for example, the nonprofit entity, most nonprofit entities that are used in crypto, they're not going to get taxed, right? And the people who are members or governors or directors of that nonprofit entity, they're not going to have to pay taxes just because they're governors of a nonprofit entity. And so you tend to want to maximize how much money flows into that entity, as long as you don't have other reasons that you need it to go somewhere else, because you're not paying taxes on that. Now, let's say the founders own the Delaware C Corp or LLC that's on the right. That's a traditional for-profit company. They may also want to get paid as much as possible by the DAO LLC or the other nonprofit that represents the DAO, because they want to make money, and then they can distribute that profit, but they're going to have to pay taxes. So just like any traditional company, there's different types of tax treatments you can elect for. You can elect to be taxed as a corporation or a pass-through entity. And so once the money touches that entity, that's where that tax treatment will get kicked in. So you can see how there's a lot of different things that you kind of have to think about. There's the members and their taxes. There's your nonprofit entity. There's your for-profit entity. There's the DApp or protocol, which is probably not paying taxes and not really taking specific responsibility for any of the financial flows that are flowing through the companies, just between the members and how they interact with each other. So I'll just show a few more slides, just things to think about when it comes to taxes and legal issues. So again, I mentioned pass-through taxes versus entity taxes. Some entities pay taxes and their members have to pay taxes. Some entities pay taxes, but their members don't, unless they sell their shares at a date in the future. Some entities are completely pass-through, which means kind of like they're taxed as a general partnership. And I mentioned the value of leveraging nonprofit entities. Taxes on transactions. So, DAOs often have contributors. Well, contributor is not a legal term, right? When you're paying someone to do something, you've got to consider them, for tax purposes. Well, are they a volunteer? In which case, maybe you're really not paying them. Maybe you're just giving them a little stipend. Are they a contractor? Are they an employee? Are they a grantee? You're giving them a grant. All these things have different tax treatment, and usually that tax treatment depends on the jurisdiction where that person or party is based, not where your DAO is incorporated, and so that can get very complicated. And what about when your contributors are anonymous, right? The IRS never thought about how to collect taxes from anonymous people. It just wasn't something they ever imagined. That's going to cause some conflicts, especially when you have a US anonymous contributor. There isn't really necessarily a great solution for that yet. And then what about compensation with native tokens or other assets, right? When one entity gives Ethereum to another, that's a taxable event for the entity or person that gave the Ethereum. That's as if you're selling it for dollars at that moment. And so you're going to have capital gains or losses associated with that payment. And the same is probably true for native tokens, although you can try to treat it differently, more like stock or stock options if you want to. Then again, most crypto projects are trying to avoid their tokens being considered securities. Other common challenges. Taxes usually have to be paid in fiat currency. So what if the DAO doesn't have fiat or a way to get their money into fiat? Maybe the Glow card can help, although most tax authorities don't take credit card payments either. What if the DAO doesn't want to pay taxes? I think one really interesting thing about DAOs, either when it comes to taxes or let's say they're found guilty of some crime and fined $1 million. Well, unless the DAO has some kind of central control, which I would say makes it generally less of a DAO, the DAO has to vote to pay the fine. And I think it's going to be really interesting when you have mostly anonymous groups of people fined $1 million by the SEC or the IRS and then voting not to pay it, right? And again, this happens in traditional companies too, but it probably hasn't happened yet in the world of DAOs. And it's also challenging to have members or owners all over the world. So it's hard to find legal and tax advice for DAOs. One reason is that most DAOs are global in nature, and so you're not always in a position to hire lawyers all over the world and tax advisors all over the world. You kind of have to find a lawyer or tax advisor that kind of considers themselves global. I mean, any lawyer will tell you you're not really allowed to be like a global lawyer. You have to have your barred in certain jurisdictions. But realistically, crypto lawyers have learned that they have to effectively give global advice, and they will when you find a good one. And DAOs need innovative lawyers and advisors, right? When you go to someone, the first person you go to might say, sorry, you can't do that. It's like, well, I am doing it, so that's not helpful, right? The next person might say, well, you can do that, but I'm going to have to hire lawyers all over the world and tax advisors all over the world. And again, it's like, well, unfortunately, I'm just not going to do that. But the third lawyer or advisor you ask will eventually say, okay, this is challenging, but we'll do the best we can with the situation we've got. We'll figure out how to address new, unique situations and go from there. And that's the one you want. At our company, we don't get paid for this, but we have a network of lawyers and tax advisors all over the world. If you want to talk to a lawyer or tax advisor, please reach out, and I'm happy to get you connected with one. Usually they'll do a free consultation, and usually really is free. Like they'll tell you if you don't really need their services. They're all busy anyways. They're not like dying for more clients these days in crypto because they're so busy. So they'll tell you if actually you don't really need their help, or they'll tell you if they think you should hire them. We have the guide to DAO incorporation, which you can download from the QR code if you'd like. My contact info on the right. And thanks very much for listening.